In the UK, aside from Brexit talks, the Bank of England on Monday announced plans to tweak its capital requirements for British banks to allow them to continue lending in the event of an economic crisis. UK employment data was also published today. But let's start from the corporate world with Juliana. Hello, Juliana. Well, Unilever has given a profit warning. Just wondering why, and is that rocking the shares? Just bring us up to speed with the general market sentiment.
Good afternoon, Chimi. Well, yes, Unilever was one of the biggest movers on the stock market at early trading. Their shares fell by more than 5% after they issued a 2019 profit warning to their shareholders, saying that they won't expect to make a profit of between more than 3 and 5%, way below the 15% that had been initially forecast. They cited several reasons. Of course, the slowdown in global growth in general. They also said it's been tough trading in West Africa, and also their main market in Asia, particularly in India and China, is really struggling. They also said that in 2020, the first half won't be any better, but they hope to pick up some consumer confidence in the back end of 2020. So that was one of them. You've already spoken to Conrad about Boeing, which is really, shifting the markets, of course, in the US, which is due to open, and it has affected the markets here in London. One of the other big issues that we have, particularly on the currency market at the moment, is the return of a no deal or a hard Brexit. Boris Johnson, the British Prime Minister, has said that he will be putting into law some sort of fixation on the transition period. So even if he can't get that free trade deal that he hopes to get with the EU before the end of December 2020, we will be leaving, and that's really affected sterling. At intraday, the FTSE All-Share is down 0.34%, the FTSE 100 is down 0.06%, and the FTSE 250 is down 1.40%. In currencies, the British pound down on the US dollar by over 1%, down on the euro by 1.14%, and down on the Japanese yen by 1.03%.
Okay, let's look at the data front. It's interesting to see that employment rate in the UK is at all-time high of 76.2%, despite the tense political landscape. It's more interesting also to know that a quarter of women are neither working nor looking for work. What does that tell you, Juliana?
Well, I suppose, the UK labour market data is really a reflection of what's going on in the UK high street. The fact that 60,000 part-time jobs were removed in the last quarter, the 3 months to October, does affect women. Women in this data have fallen out of jobs by more than 30,000. We know that a lot of women, a lot of young mothers, they do like to work part-time, and a lot of high street stores employ part-time staff. And with the collapse of the high street, or the decline in numbers coming into the high street, those jobs are going, and inevitably it does affect women, sadly. I must say, in London, though, one of the highlights from the data is that the job rate, the number of people in unemployment is falling. At the moment, it's at 3.8%. This is the lowest it's been since the 1970s. Analysts had expected it to be at 3.9%, which it was at the last quarter, and stay at that rate. But it is fallen, so it is seen as a good thing. Of course, as you mentioned earlier, we do have the Bank of England Monetary Policy Committee meeting on Thursday, and even though interest rates are expected to stay at the same rate, the fact that there is a fall in unemployment, which means there's an increase in people working, this could put upward pressure on the amount of wages, and of course an upward pressure in the amount of wages does lead to an upward pressure on inflation. So it isn't expected to change anything, but it is expected to, rattle the MPC policymakers on Thursday.
Okay, now, in the Web's latest report on the global gender gap, the UK slipped from 15th to 21st place. Can you relate this report with the latest employment data?
Well, I suppose, gender pay and that gap has been a global discussion. Of course, the UK being at 15th isn't fantastic, but considering just how many countries there are in the world, it's still, I would say, in the UK seen as quite a good thing. They're trying to change, but there have been some issues. The World Economic Forum, who've compiled this data for the 2020 report, have really focused on a couple of things. One is the amount of women in part-time positions. If you work part-time and your colleague works full-time, of course, you're going to be earning less money than them. And in the UK, there are 3 times more female part-time workers than there are in males. And unsurprisingly, they've also looked at the number of women in Parliament. Now, last week we had a record number of women that were elected into Parliament. I think there was over 220, which is huge, but it's still not enough. And that's really reflected in the drop in changes. Of course, Finland, Norway and Iceland, they're the leaders of this pack, and their gender pay gap seems to be improving. But the World Economic Forum says it may take 100 years until we actually see the real changes and real women working in the same jobs as men will see equal pay. So 100 years is quite a long time, so there's quite a long way to go, of course.
I agree with you. It's a long time, but we'll have to wait and see what happens. Thank you, Juliana. Enjoy the rest of the day.
Thank you, Chime.